Welcome back. In the previous sessions, we were discussing about the introduction of accounting for management, its nature, characteristics, scope, how we can install a management accounting system within an existing organization, recent trends. Next, what is the difference between cost accounting and management accounting? In the previous sessions, we came with cost accounting aspects as well as management accounting aspects, and here we are going to discuss about how management accounting differ from cost accounting. Here, the cost accounting's objective is to ascertain the cost of production and the control of cost. But in management accounting, the objective of management accounting is to help the management in whatever possible manner to discharge its functions efficiently. And at the same time, management accounting uses that data of cost accounting which assists in decision making. In second point, it dealt with nature. On the basis of nature, the cost accounting uses both actual and estimates for ascertainment of cost, as well as fixation of selling price. But in the management accounting, it is more concerned with estimates and projections. It is mainly futuristic in nature, because one of the functions of management accounting is forecasting and planning. In the third point, we dealt with scope. In cost accounting, it mainly deals with costing and cost accounting methods and techniques. But in management accounting, it has a wider scope and inclusion of financial accounting, cost accounting, budgeting, tax planning, and management reporting, and many other disciplines which we have discussed in the previous sessions. Thus, management accounting is wider scope when compared to cost accounting. In the next point, we are going to deal with nature of data use. The cost accounting uses only monetary and quantitative information, whereas management accounting uses both quantitative and qualitative information. We have discussed about this area in the nature class, where we dealt with various characteristic features of management accounting, how quantitative and qualitative factors work in management accounting. The next point, stage of development. Under this, cost accounting has an earlier development. It developed during the later part of 18th century after Industrial Revolution. But management accounting has a very recent origin. It developed during the later half of the 20th century. And it's always in a developing stage. These are the major differences between cost accounting and management accounting. Next, we are going to deal with differences between financial accounting and management accounting. Even though they find it similar, there is quite differences between both areas. In the first point, we dealt on the base of objective. Financial accounting mainly serves the interest of outsiders like shareholders, creditors, investors, etc. Whereas management accounting serves the needs of parties mainly internal to the business, managers, shareholders, and internal parties. Mainly is the management who are interested in maintaining management accounting system. The second difference is based on nature. Financial accounting contains historical information, whereas management accounting contains actual data as well as estimates and forecasts, because it is that part of management which helps in decision making. And the third difference is on the basis of accounting principles. Financial accounting is based on generally accepted accounting principles because it is statutory, where it deals concepts and conventions. But there are no strict accounting principles followed in management accounting, because one of the nature of management accounting is it's not statutory. Next one, precision. On the basis of precision, financial accounting gives more importance to objectivity of information, whereas management accounting gives more importance to timely reporting of information, even if they are less precise. Because one of the nature of management accounting is it is mainly subjective rather than objective, unlike financial accounting. Next point of difference is on the basis of periodicity of reporting. There is a periodical reporting of information in financial accounting, that is quarterly, yearly, etc. In management accounting, there is continuous reporting of information. It may be weekly, quarterly, monthly, half yearly, yearly. It depends upon the requirement of the management or organization, because there is no statute regarding preparation of or maintaining of reporting. Next one, nature of data used. Financial accounting only deals with monetary as well as financial information, whereas management accounting contains both financial and non-financial information. It is another version of quantitative and qualitative factors. Next point, statutory requirement. We all know financial accounting is statute, or it has to be prepared on the basis of statute, or management accounting is non statutory. Maintenance of adequate books and records under financial accounting is a statutory requirement, whereas management accounting is not a statutory requirement, it is an only optional. It depends upon the requirement or interest of the organization. Next point of difference is coverage. Financial accounting reports cover the entire organization as a whole, whereas management accounting reports cover the organization as well as its segments like department, products, etc. Because it is that part of management which helps in decision making. Thus, it has to deal with all the areas of organization. Next point of difference is scope. Financial accounting has limited scope when compared to management accounting. The main focus of financial accounting is only preparation of financial accounts or final accounts, whereas management accounting has wider scope as it covers areas like budgeting, cost control, decision making, and many other disciplines which we have discussed in the previous sessions. Thus, these are the major differences between financial accounting and management accounting. We will discuss about the further details in the next sessions. Thank you.